The government's about to give you some money. If you spend that money and inflation goes up, we're going to have to raise rates.
I feel like in this market, you're either really struggling or doing okay. I think the middle ground is sort of broken up a lot as well over the last few years.
I think there's also a sentiment that there is a recession coming. People think that's going to happen. But the banks and the government is saying that that won't happen. But I'm just interested to see, like, where does this flip? The RBA is running out of ideas as well.
The RBA is running out of ideas, and that's what we're talking about
It's
today.
like that scene from The Simpsons
Go for
with
it.
Flanders when he was a baby.
Stupid sexy Flanders? No, which
And the
one?
parents like, Doc, I've tried nothing and we're all out of ideas. You know, remember that scene?
Because his parents are real hippie.
Yeah, they won't smack him or do anything. And then the doctor... You know that? It was a good scene.
It worked for Flanders.
There we go. Yeah.
Holy ho, neighborino. Today, guys, we're not talking. We should do a Simpsons podcast because I reckon Chris and I reckon we get some.
Yeah, we're up there.
But only for
yes.
season 1 to 12.
There's a lot
Yeah,
of
about
predictions
12.
in there that have come through.
A lot of them. I reckon the Simpsons writers are from the future.
Yeah.
Oh, for sure, man. The
Definitely.
predictions are
Yeah.
crazy.
Yeah. they're accurate.
100%. So the RBA, as of on May 7 at their recent meeting, they decided to hold cash rate at 4.35%. We're going to talk about it today. I want to get a quick round of like 1 word, 2 words, what you think about it. So we'll start with you, Savannah. What are your thoughts on the cash rate on hold?
I don't know. It seems like a appropriate decision. Like I've been reading about inflation and unemployment rates, and it seems like a proper choice.
He-Man, agree, disagree? What are your thoughts?
Agree. Look, relief is the
Yeah.
one word.
Yes.
I'm so relieved.
You're relieved personally?
I'm relieved personally. I'm relieved professionally.
Yeah.
Why
About the RBA
professionally?
rates, that is.
Yeah.
Yeah.
Mhm.
It's, I'm just so relieved. Because
What
on
else would you be
the,
relieved about, though?
mate, on the professional front, so whenever there's a change, whenever there's an increase, I just think about all the pre-approvals we've got in the pipeline.
Yes.
Because that changes things when it comes to borrowing capacity, right? Especially with customers who are pre-approved to the maximum borrowing amount to meet their budget. So whenever there's an increase, the loan amount gets reduced. So we've got to review that, revisit that, assess it, tell them the bad news, right? So when there's increases, it's a nightmare
Increases
for
the
us.
workload for your people.
100%.
Does it happen in reverse? If there's a decrease, you guys obviously probably have to readjust and make calls, but it's more positive calls, right?
Correct. And it doesn't sort of impact that much, for example, because not everybody is buying at their absolute limit. So when there's a decrease, their borrowing capacity goes up, but they may be limited by deposit, for example, so it doesn't impact them, right? But if it does, for someone that we know is looking for greater borrowing capacity, that's a great call to make.
Yeah, nice.
You know, for example, when the new tax rates kick in, you know, we've already got scheduled to review some of those calculations for customers needing to push that borrowing capacity.
All right, thanks for your 1 or 2 word vibe check, Chris. RBA rates on hold 4.35%. What are your thoughts?
Is it more than 1 word? Or
You
just...
can say 10 words. After that example, you can say
I was
whatever
just
you
following
like.
Sav.
It's funny because we're talking about on hold or rate increase.
Yeah.
I remember like a couple of weeks ago we were talking about rate cuts.
The conversation has changed a lot, hey, in the last
Yeah.
few
Conversation
weeks.
has definitely
Yeah.
shifted and justified, I believe.
It's interesting because the morning of the call, you and I were talking about it, and we're kind of like, I don't know what's going to happen today. Like, wouldn't be surprised if it was a rise. And Michelle Bullock did state that they did discuss a rise in the meeting. Wondering if that's just all talk to keep us on our toes. And I think it might be, and I think that might be a good thing as well.
I don't know if it is. I think there's definitely the data out there to justify a potential rate rise yesterday. And I think the next meeting is going to be really interesting to see some of the data from now to the next 6 weeks to see what comes out, particularly on the unemployment side of things and the inflation data.
Yeah.
It's not looking good.
So let's talk about some of that because the RBA, a couple of key points from the meeting on May 7. Inflation remains high and is falling more gradually than expected. So that's probably some of the data you can unpack for us, Chris. The outlook remains uncertain, which we all kind of know. We had a conversation about this last week. And the return inflation to target of between 2 and 3% is still a priority. So forecasting that will happen second half of 2025 to mid 2026.
That's the thing. If it's the second half of 2025 to mid 26, they're kind of setting it up that there could be justification for rate rises, in my opinion.
That's a long period.
It's a long period to be having. Are they suggesting that inflation is going to be high up until then? That's a long
Oh,
period
they're
to be having
suggesting that-
higher
They're
inflation.
suggesting
Yeah.
that it's coming down, but just slower than it has in
Yeah.
the past.
Then you probably need to raise
Yeah.
rates.
So let's talk about that. So what's the data that makes you feel this way?
Oh, look, I think just the change of data in the last 6 weeks, and it's probably going to be different in the next 6.
Yeah.
That inflation has gone up again. It's ticked back up, and they're concerned about that. And the unemployment rate has ticked down. So I know there's new unemployment figures coming out in about 2 weeks from now. So it'll be interesting to see what happens there. But I don't want to lean on any predictions because we just don't know what's going to happen. But we've seen things like I always talk about oil, and it's come off some of its highs recently in the last 3-4 weeks, which is going to be something they're looking at. And I think they're saying a lot of the inflation has been built up from oil, which we always say.
Yeah.
But, I think there's definitely some justification, particularly looking at just the inflation numbers and the unemployment numbers, that it's staying on hold or going up.
Even Michelle
Yeah.
Bullock, I think it was in the AFR, correct me if I'm wrong, or apologies if I'm wrong, but she was surprised filling up petrol in her car. She was surprised by the cost of petrol as well. I don't know
Yeah.
how accurate that quote was, but
She's
or if it
probably
was
feeling
Yeah.
like,
accurate.
going, geez, they need to raise rates. I mean, oh, wait, hold on.
Yeah. But what's interesting is we talk about they need to raise rates, and I think it could be a little bit of lip service, trying to keep us all on our toes, because if you look at the actual data, if you split out inflation by category, you look at discretionary spending, so things like retail, home, furniture for homes, et cetera, that's our holiday spending, et cetera, that's all down.
That's exactly,
right?
yeah,
It's all
what I was
gone down.
reading.
So
Yeah.
anything that we can do as a household,
Yeah.
we're doing.
People are
right?
already being impacted
service-based.
It's
with their
service
spending.
based. So
yeah.
education,
Yeah.
fuel, et cetera, these are the things that we as households can't control. So I actually think it's very interesting because like a lot of inflation is caused at a government sort of and a service level at the moment. So does a rate increase? This is why I think it might be a lip service, and I hope I'm right, but I think the increase, any discussion of an increase, is actually hard on the mortgage on anyone with a mortgage, because we're doing, as a household, we're already doing everything that we can do.
Yeah.
There's a big problem that's about to come up, I believe, right? Because there's a budget coming up in a week, right? So this is
Get the money printer ready.
Yeah.
this is going to be interesting, right? Because at the moment we've got an RBA that wants to bring inflation down, but we've got a government. What are they talking about for this budget? Does anyone know what the big key discussion point is? It's housing. What else? Does anyone know? Does anyone else know what the big key point is? So what is Albanese? What is everyone asking him for?
Tackle the cost of living.
Cost of living crisis.
Yeah.
Right. So we're going to have a budget in a week where the big key item, or one of the big key items, is cost of living pressure,
Yeah.
and helping people with cost of living pressure. So we've got the RBA that's saying inflation needs to come down, but we've got the federal government saying, hey, we're about to make some changes that is going to keep inflation going up. There's two very different objectives here. And it's going to be really interesting to see how this play out.
Yeah.
I haven't even mentioned, like I did a couple of weeks ago or maybe last week, the tax-free rate cards. So at the moment, we've got household spending going down, but there's about to be an injection for households across Australia.
Yeah.
That's what's scary to me.
Yeah.
Yeah, for sure.
Will that be spent on services that are increasing in prices?
I don't know. We'll find out in a week.
Yeah.
We'll find out in a week. Maybe next week's discussion could be about budget and how that affects
Yeah.
how that could affect house prices and housing in Australia. But it's all very interesting, Chris. I know you guys.
There's a lot of politics at play, I think, as well. We're in an election year, or coming up to an election year. Do they want rates rising into the election, or do they want? That's another important.
When is
point.
the next election? I'm not even across this. It's next year.
It depends when they call it, but like, how much of this is politics? You've got the budget coming out. Do you want to raise interest rates just before the budget comes out?
No, well they won't.
Yeah.
But yeah, exactly.
Or they didn't. So how much of that is politics versus how much of that is actual what's required? I mean, if underlying inflation is sitting at circa 4%, you're never going to get inflation into the band range at with a cash rate of 4.35.
Yeah.
So
Yeah.
So you're now very bullish that it needs to be
no,
more.
I'm saying we need to review the data, and then that's
Yeah.
again at the beginning of or end of last year. I was saying rates are going to come down. I was saying that
Yeah.
based off the data because it looked like inflation was ticking down,
Yeah.
unemployment was ticking up, but they've both flipped.
Yeah.
So change of data.
No doubt the
Yeah.
data's changed dramatically. And like you said, unemployment data comes out in 2 weeks. The data they're looking at for unemployment is from March. So it's actually 2 months old.
Yeah.
So a lot of the things I'm talking about now, so the budget in a week and then tax 3 cuts. I mean, the next meeting for RBA is June 17. They're not going to see the effect of those things on June 17. They're actually going to see the effect of those things at the next announcement 6 weeks later. So it's just going to be, I think we're all it's like a ticking time bomb. We're all here waiting to see. We don't know which way it's going to go. But like you said, the sentiment at the moment out there, Chris, and I'd like to get your opinion on this as well, guys. The sentiment on the street is there could be a rise coming. So I think, people are sort of holding on to their hats a little bit.
Yeah. I think there's also a sentiment that there is a recession coming. So I was reading about, that this in a survey they were asking people do you think recession is around the corner? And the sentiment is there that people think that's going to happen. But the banks and the government is saying that won't happen. But I'm just interested to see where does this flip?
That's the thing.
Yeah.
The government not letting it happen
Yeah.
can only drive up inflation.
I think there's such a
Yeah.
divide as well between
Yeah.
the different classes, right? So the middle class probably destroyed since COVID. I feel like in this market, you're either really struggling or doing okay.
Yeah.
I think the middle ground has sort of broken up a lot as well over the last few years, which is really sad to see that there's sort of been this destruction of the middle class. And it's got to, probably going a bit off topic, it's got to do a lot with how the governments, and it's probably on topic with the budget, but how governments printing money.
Yeah.
Just throwing money out there to buy, even we talk about the $3 billion that they're wiping off on HEX, right? It's
That's
just to
right.
buy votes.
Yeah.
That's all it is. Your constituents are angry, so
Yeah.
all right, let's just chuck $3 billion at it
Yeah.
to make them a bit happy.
Yeah.
Mind you, there's still $78 billion or something owing. It's not. It's it's a drop in the ocean.
Yeah.
But it's a huge problem in terms of the government spending, and ultimately, I mean, someone has to pay for that. And it's the taxpayers. So we're all paying for it in the roundabout way.
But then with the tax cuts, it's
So Chris,
how does it
they're
all
just
add up?
moving they're just moving the water from this bucket to that
That's
bucket, and then
right.
just shifting
Exactly.
it
That's
around,
exactly
playing
what's
musical
happening.
chairs almost.
Yeah.
so
And
Chris,
then when
Yeah.
the music stops, there's no chairs
no
left.
chairs
There's
left.
no chairs
We're not
everywhere.
building enough chairs. This podcast is brought to you by Coposit, where 10K means you can buy a brand new property. That's right. It sounds too good to be true, but it's not. Check it out, coposit.com.au. What I'm hearing from Chris is we should all sell our properties and buy Bitcoin because it is printing money. No, I'm just
Definitely not.
I'm just kidding. How does it affect property now? This
Confidence.
It's just the confidence is
Confidence,
shot.
man.
Yeah.
Property's still strong at the moment.
Yeah.
But if the headlines continue with rates are going up, for the people that are sensitive to rates from the mortgage side of things that they may have, and so we even talked about in the last episode where you've made a decision to say, I'm going to wait and see what happens.
Yeah.
That's the confidence, right?
Yeah.
You've lost confidence to
Yeah.
go out and buy.
That's right.
Is
I
it
think it's the levels of uncertainty as well. Everything that I've read on the statement, it's about uncertainty. And I think that uncertainty eats into fear because you don't know what's going to happen. It, can go either way. So,
Yeah.
Paralyzed by fear.
Yeah,
Yeah,
it makes a lot of
yeah.
sense. But I got from reading the notes from the board meeting is my personal opinion is that there's not going to be any rate cut in the near future because the comment that says in the near term inflation is forecast to be higher
yeah.
reads to me is they're basically saying, hey, there's no rate cut in the near future
No.
because they're forecasting inflation or their outlook is that inflation is going to be higher.
I actually think it's irresponsible because of what I said before
Yeah.
about and unless the data changes, and it could with a budget that gives us too much to
You
spend.
won't feel that straight away, though.
Yeah, but so when when discretionary spending is low and services are high, I think a rate increase is irresponsible because people are already as low as possible on discretionary spending. You're hurting people for no reason in that regard. So I actually think you're right. And I do believe, like Michelle Bullock is saying things like, I'll read a quote, we don't think we necessarily have to tighten again, but we can't rule it out. If we have to, we will. That's what she said. If we really think that inflation is going to be persistent and significantly above our forecast, we will tighten again. Right? But I think this is like making sure, so like I said, the RBA and government conflicting
Yeah.
conflicting at the
I don't know
moment.
if it is. I don't think it is lip service. I think they're looking at the data. They're seeing a change. The last few meetings have been rates are on hold, potential cuts. You can't just go from rates on hold as a organisation even. You can't just go from rates on hold, potential cuts, to then the next meeting,
But
rate increase. It doesn't work that way.
Maybe
So you
it's-
got to slow the tide. This meeting is, we're looking at inflation. It's a problem. If the next set of data comes out where inflation is still high or ticking up and unemployment is where it is, they're going to raise.
I think you're right. But when I say lip service, what this means, that what I just read out, what it means is, guys, the government's about to give you some money. If you spend that money and inflation goes up, we're going to have to raise rates.
Yeah.
That's what she's saying. Like,
Yeah.
that's what that quote means. So you're right. If the data changes, they're going to go up. But she's saying, she's trying to keep everyone on their toes and keep everyone
Yeah.
like scared to spend.
Yeah.
And also set an expectation, because the meeting notes also talk about expect inflation to decline over 2025 and 2026.
Yeah.
Yeah.
So, guys, there's no rate
Hey,
cut this
guys.
year. Don't
Yeah.
celebrate too early, right?
Yeah.
Take it easy. The earliest you're probably looking at, subject to data, of course, is 2020, mid-2025.
And that's the local data. There's
Yeah.
also what happens in other
Yeah.
central bank locations.
So what's
Yeah.
going
So
on
the Fed.
overseas?
Well, if
Yeah.
the Fed, they're not cutting. So if they continue to have rates where they are and if they have to raise again,
Yeah.
we will have to raise. So we have to look at what other international
Yeah,
countries
China.
are doing or other international
Yeah.
locations.
But inflation's on the
central
way
banks
down
are-
in the US, right?
It is similar. It's about 3%.
3%.
Yeah, so it is.
But they're moving downwards.
Yeah. Yeah, I think globally it's moving down, but it's just services that are
It's still
staying
sticky,
high.
though.
Goods are going
Yeah,
down.
but the sticky stuff is, like I
Yeah.
said, the sticky stuff is petrol, it's
Yeah.
education,
Yeah.
it's stuff
That's right.
households can't control. And if you chuck an extra 2.5% on everyone's mortgage, that money's not
That's
coming
right.
from the households.
No,
The inflation's
that's
not
right.
coming down
It's
from
not
the
just
households.
so rates aren't designed to just hurt people with mortgages. It also helps on Australian dollar impacts. It helps with businesses that may have debt.
Yeah.
They decide to spend less. So,
Yeah.
so there's other. It's not just households.
Unpack that a little bit too, because I don't think the regular public would
yeah,
understand
that's
that.
right.
Yeah, so I mean, so there's a pricing difference between, for example, the AUD US. So what we can exchange our Australian dollars for US dollars. If our rates are lower or higher in comparison to the Fed, that changes where the exchange rate that you can get very up or down, depending on the differential between the interest rates for the central banks. So us cutting rates and would mean an increase in the Australian dollar, for example. So that's the differences between. So then if there's an increase and our borrowing power from an Australian dollar is higher, that means goods can come in and there's be more spending.
Yeah.
So
So rate cut good?
could be.
Okay.
Well, if they're
So you
doing
were
it
agreeing
out of
here?
no, if they're doing
I'm
it
not
out of
saying-
cycle.
Yeah,
Yeah.
yeah.
So if we cut and the Fed don't, then that's different.
Then that's
But if they're
good.
both
Yeah.
cutting, it's
Yeah.
depends
Yeah.
on both.
Which is frustrating because we always seem to follow the Fed. Well,
We
that's
do.
that's the
we
like,
we
Yeah.
follow. We're usually 6 months behind. So that's on the global side of things. But locally, if a business has $1 million in debt, that attracts an interest rate. The interest rate goes up, and they might decide to prioritize repayment of that debt as opposed to investing in a new product or feature that they were looking to release or service that they were looking to bring out.
Yeah. So how does economic growth tie into all of this?
Like
Like, are we
GDP?
looking? Like, how are we looking at this in terms of inflation?
So it's not in the mandate to look at GDP. GDP is more a
Right.
figure for government to look at. So
Oh,
the
right,
government
okay.
they don't want to be negative. 2 consecutive quarters of negative GDP means a technical recession.
Yeah.
So they don't want to see negative GDP, i.e. the economy shrinking. They want to see growth. It's not really, you don't want to be going into an election with, hey, we've
Yeah.
had 10 quarters of negative growth. That's not
Yeah.
a really good election.
Okay. So
So
that
they
maybe
wanna
has
have that
more to
growth.
do with recession and okay.
it goes back to the
Yeah.
conflict, right? Government versus RBA.
Oh, there's a
Yeah.
huge conflict.
Yeah.
Yeah,
Yeah.
a massive conflict.
But the cash injections that they're going to be doing, like for energy, I mean, when they did it on petrol, like those are services, like they're essential services. So it's not on like so people can spend it on holidays.
But do you reckon people do? Like if I'm saving, what was it, 50 cents a litre on petrol,
Yeah, maybe. I
as
don't
Michael
know.
says,
Yeah.
you give someone
Yeah.
$100,
Yeah,
are they going to
true.
spend it?
I suppose so. Yeah.
Because they don't have a budget.
yeah.
Yeah.
Yes.
We don't know what the budget
It's
is.
definitely
Yeah.
true.
And we don't know
Yeah,
what the
yeah.
details of this budget are, but we do know that.
I think Jace
Yeah.
means
Relief is
personal
coming.
budget, right?
Yeah.
Yeah.
Oh, your
Yeah.
personal budget. Yeah.
No, it's true because if for the last year I've been spending $500 a month on fuel or whatever it is, and if I'm now spending $400, where does that that additional $100 in my budget? Where do I reallocate that? Is that to savings or is that to bags of chips or is that to?
How much do you
Yeah.
spend on fuel, Jace?
Not much. I think about $18 a month. charging the Tesla. So please don't hate. Please don't hate.
Jason is
That
proudly
was a good
sponsored by
choice.
Tesla.
Yeah.
I'm not an aggressive EV owner.
No, look, it's good though. You got all those cost savings. It'd be good
Yeah.
when you need to replace the battery. So it's
Yeah.
good.
Yeah. Cool. I think we can recycle it. Yeah.
Well, we get to cars now every week, don't we, at the moment? And it's probably my fault of steering the ship that way. Guys, let's get back to property. So cash rate on hold. What's it mean for the property market? You said that it's still strong. Like, how the hell is the market still strong?
It's a great question. Look, I think it's more the confidence side of things. It will impact confidence. If people see that everyone was thinking the rates are going to come down as the next move, it's looking like it's not. So how does that impact people's decision making to go out and buy property? I don't think we've seen it yet. We'll probably see that filter through in the next few weeks and months with auction clearance rates, and we'll see what that looks like.
It's true, man. Like the word on the street. We got the word from Sav last week. She was looking at buying. She's not looking anymore. It's confidence, right? That data doesn't come in. It won't come in till June 17 when they meet again, right? But when we all thought rates were going down, and we all have our jobs and everyone's happy,
Pile in.
hey, it's fine, whatever.
Yeah.
We can do 6% on our mortgage or whatever, that's fine. But now it's like, everyone's talking about jobs and everyone's talking about a potential rate rise. Some people, if you listened last week, talking about 3 rate rises. All of this conversation, it's going to be an interesting couple of months. Are you seeing it out there with your customers at Kalido, Jace?
We've seen a massive increase in first home buyers coming back into the market.
Coming back.
Really?
Since the beginning of the year. So last year was really quiet, right? Literally, they've all dropped off. But the beginning of this year, because of the stability, I think, in the rates, because I think the last rate increase was November last year or something like that, right?
Yeah.
Yeah, so it's been really stable. So I think that brings certainty, like what you're saying, Sav, and confidence, and people can make those big financial decisions. So coming back into the market, securing properties, our pre-approvals are converting to settlements, at a much higher rate compared to last year. Yeah, so that's where I can see that when there's stability and certainty in the rates, you have more confidence in the buyers, because it's not necessarily that the rates are going to, say a rate increase is going to stop this person buying, but it's the confidence of what they think the future is going to hold and how that may impact them.
So, I mean, we know from a lot of our discussions and research that interest rates, yes, have an impact on property, but they're not the be-all and end-all for property. I mean, we've seen that over the last 40 years. I mean, property's just, it's continuous. It's doubled every 8 to 10 years.
I suppose property's a long-term game, so...
Yeah, correct. Because then you've also got a lot of investors in the market as well, because it is more expensive to actually buy owner-occupier. Your borrowing capacity has been impacted by the rate increases. You can't borrow as much, but if you buy an investment, you might be living at home or you might be renting. You could borrow more money because of the negative gearing benefits, the rental income that comes into play in the equation, right? So that's where you're seeing a lot of borderless interstate investors now, right? The rent investing topic is very popular. It's trending all the time because people are still trying to get into the property market, but just in different ways.
So it's first-time buyers who are investing more so than living in it.
Yeah, 100%.
Are they doing that
Okay.
because they need
100%.
the additional income of the
Yeah,
investment
correct.
to
Correct.
get the loan?
That's right. So you get
Yeah.
a much improved borrowing capacity if you're purchasing as an investment.
Side note,
Yeah,
even the
interesting.
borderless investing is getting harder. So I read recently that the median house price in Adelaide is approaching $1 million.
Yeah, right.
So what's
No
left?
way.
Where
Melbourne.
Melbourne's gone. Melbourne, Perth is still out there. Darwin.
Yeah, correct.
Wow.
Correct.
Tasmania.
Yeah, Perth is so hot at the moment, right?
Yeah.
You've got buyers agents left, right, and centre buying up property for their clients. You've got people buying there themselves. Some of the conversations I've had with some of the mortgage brokers in WA, they've never been busier.
Ah, interesting.
Yeah, like the market's crazy because that's where all the effort and the concentration of buyers are going to.
But it's all with buyers agents, interstate buyers. Like that would be flooding the market.
Absolutely.
I saw a good TikTok. It was like someone losing an auction to some interstate buyer from Sydney
Yeah.
who hadn't even seen the property.
Yeah,
and now
yeah.
these are the new problems for the locals in Perth.
Yeah.
Where do they go?
Yeah, 100%.
That's
Where do
right.
they buy?
Yes.
Absolutely,
Yeah.
absolutely. So that's what they're seeing because when you can buy a house for $500,000 to $600,000 and it rents out for $550 a week,
Yeah.
Yeah,
you can't get that here, right?
No.
That you could. It's on a 500, 600 square meter block. Yeah, it's not out in the sticks.
Yeah.
Where can you buy in Sydney like that?
Yeah.
So you talked on like what impact is this discussion or a future rate rise going to have on property generally. I mean, I think there's still some other factors at play that are still keeping property strong. And you ask, why is it so strong? I think there's still really two main factors, which is the immigration numbers, which is still at record highs. Wake up, government. And the second part is the housing supply side of things, where we're not building. So these two factors combined with, rising interest rate environment, but those two factors alone are still going to continue to have strong demand for property. People coming here to this country they need to live somewhere. That's pushing up rents, pushing up the returns. They might be buying. Less construction happening.
Okay.
And interest rate rises is only going to make construction harder to get out of the ground. So
that musical chair analogy just keeps. So
yeah, I wonder if there will be like a knock-on effect, because even if you're renting and like a first-time buyer, maybe you'll be eating into your savings as well because the rent increases. So I feel like, is there going to be like a knock-on effect? Maybe it's strong at the moment because people still have got cash, but like down the line.
Yeah, but because it's a long-term strategy, right? And I think people want to get onto the property ladder.
Yeah.
So if they can't do it buying their first home, the next best option is to buy an investment property.
Yeah.
Right? Because in comparison, if they were buying something to live in the, say, for example, they're from Sydney, you're looking at $800K, for example. Right? But in comparison, you can buy an investment property interstate for $500,000. Right? You're getting a smaller
rent
loan,
investing, I guess.
and you get you get rental income coming in. You get negative gearing benefits. That helps you reduce your taxable income. So forth.
But especially you won't be getting all the benefits then that the government is putting out there for first-time buyers.
buyer.
Correct,
So you would
correct.
need
I
more
think you
cash
forego
savings.
those.
That's right. That's right.
Well, that's
yeah.
right, but you would have to save maybe more to get
That's
there and
right.
get into the market.
Yeah, well,
Yeah.
even for investment, like you don't need a 20% deposit.
Yeah,
So even
okay.
if you're not using the first home guarantee or you're not getting any stamp duty waivers, you can buy an investment property with 10% deposit.
Yeah.
The 20% deposit's got to be one of the biggest myths in the market. It really
absolutely.
has to be.
Yeah. Because if you don't get into the details, you would assume or think that I need 20%. And imagine that stops you from making an inquiry or having a conversation.
There'd be a portion of the market, like probably the younger generation market, where they think, I need a 20% deposit. And then they just give up on property.
Yeah,
there would definitely be a
absolutely.
portion of the market that thinks you need a 20%
Especially
deposit.
when they see what the average house price is.
Yeah.
20% of 1 point something million.
Yeah.
Forget it. Right? So that's a big issue. Like they really got to change that in the media about how much deposit you need. They're always talking about 20%.
It takes 12 years to save for a 20% deposit.
Because it's good clickbait. Right? You need $250,000, $300,000 to buy a house in Sydney. Whoa, that's big news.
Yeah.
And you're not saving to the best of your ability for 12 years.
No.
Like if your property is 12 years away, you're probably living a little at the moment. It's not until you're getting really close and you start figuring out your mortgage capabilities and serviceabilities that you go, okay, all right, we're going to eat noodles a couple of times a week.
Yeah.
2-minute noodles a couple of times a week.
No one's
That's
gonna
how
do
we
it
can
for
get
12
there.
years.
I'm not eating 2-minute noodles for 12 years. Right?
Yeah.
I don't care how delicious. My son this morning goes, Dad, he had a thing of 2-minute noodles. He goes, this is my favorite food in the world. I'm like, that's great. You're going to be able to buy property early, son.
No, you only got
Chicken or
to,
beef, man?
Chicken, yeah.
you only got to eat rice for a year to buy 6 properties.
Yeah.
Yeah, I'm
Wasn't there an article about that?
kidding.
Yeah.
No, seriously,
You might
maybe
be
that's the
dead.
problem. Yeah, don't eat noodles, have rice.
Brown or white?
Right? It doesn't matter.
Oh, okay.
The cheaper the rice, the better. The more properties you'd have.
Invest in rice.
Yeah,
Right.
yeah. It's coming from me,
Wow.
so you know it's reliable.
This is not
Yeah.
diet advice.
We're not going to touch that one. We're not going to question that one any further. Look, fascinating discussion. There's probably like a few subtopics that we can talk about in future weeks. The 20% thing, reinvesting, there's so many good topics. But I guess the 4.35% is a current rate. It is on hold at the moment as of May 7. The next meeting is June 17. We hate making predictions. We don't recommend anyone making predictions. Chris, what's your prediction for the next?
Saw that one coming.
Look, it's neutral, and if anything, it's leaning to the side of a potential rate rise. But I'm always going to disclaim it by saying we need to see the next pieces of data on inflation and unemployment.
Hey, man.
It's going to be a hold for me.
Yep.
Yeah. I don't care what the data says.
So?
It's a hold.
I agree with Jason.
Yeah,
Yeah.
so
I don't think I know enough about it, but I would say maybe a hold.
I think
That's my bet.
we're holding in the next one, and then depending on the data,
Yes.
ask me again next time. Or I'll ask myself again next time. But guys, another great episode of Property Now. I love when these RBA meetings happen because it gives us so much to talk about. I don't have to plan the discussion for this episode. It's fantastic.
What, you plan discussions?
Well, it doesn't seem like it, and it certainly certainly wasn't the case this time. But
That
guys,
wasn't on the teleprompter.
thanks for joining me, guys.
Thank you very much, Michael,
We
for
will
the
see
episode.
you next week. Thanks, guys.
The Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and they are general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.
la la